Is now a good time to buy Tesla shares, in your opinion, since Tesla's share price has been swinging wildly, both up and down? A lot of people are worried about where we'll actually be in a few years. If you want to know if now is a good time to buy Tesla stock, you should keep reading and watching. Tesla stock had lately gone down to approximately $650, but is currently sitting around $725.60. Although the stock price has gone up, investors are nonetheless wary of a possible decline in the coming quarters. Cathie Wood, unfazed by this Tesla bull, even encourages others to buy Tesla stock. She, along with other bulls, remains bullish on Tesla shares. They still have hope that Tesla will do well in the future. Find out if now is a good time to buy Tesla stock or not in today's video. Tesla stock, like the rest of the market, has been on a downward spiral trend because of the present economic climate. The COVID-19 outbreak and the conflict between Russia and Ukraine are only two of the many issues that have weighed down the economy recently. Investors and those interested in investing have been asking if now is a good moment to put their money to work. Yet, according to a recent article, Tesla's stock valuation is approaching more realistic levels, but this may not last for very long. Since Elon Musk, Tesla's CEO, disclosed his plans of buying Twitter, the company's stock has been on a turbulent downhill ride. However, recent reports have been brimming with good news about Tesla's vehicle production. Q1 output grew 69% year over year, which led automotive revenue growth of 87% year over year. Revenue growth outpaced manufacturing growth, leading to higher profits for each Tesla vehicle. Increases in production efficiency and price increases for its luxury models, the S and X, contribute to this profit expansion in 2021. The increase in net income during the most recent quarter represents a continuation of this trend, up 658% year over year. Among the finest in the car business, Tesla's net profit margin was 17.7%. Tesla's profit margins are rapidly approaching those of premium vehicles. In fact, the management delivered the investors a terrific piece of news. Their projections for revenue growth and maintenance of Tesla's 17.7% profit margin are based on an assumption that yearly vehicle deliveries will increase by 50% over several years. Tesla could have $14.9 billion in earnings at the end of 2022. Tesla is currently trading at a multiple of 49.5 for the fiscal year 2022. Despite many problems Tesla has been experiencing and investors' decisions to sell off their stocks, the company is continuously rising while rapidly expanding its business on all fronts and has strengthened its balance sheet and cash generation in the process, giving it a valuation of around 20 times earnings. Investors weren't sure what to expect from Tesla during the many COVID-19 related shutdowns at the Shanghai production, but Tesla provided much more than expected. The company's overall revenues of $18.8 billion, up 81% year over year, were $918 million higher than expected by Wall Street. Its non-GAAP EPS of $3.22, representing growth of 246%, also smashed consensus projections of $2.80 by 42%, capping off a record quarter. According to management's forecast, the company's overall production and vehicle deliveries increased by 69% and 68% to 305,407 and 310,048, respectively. In fiscal 2022, the corporation is expected to have achieved an average annual growth in deliveries of 50%. Revenue of $86.5 billion and earnings per share of $12.32 are projected by market analysts, representing 61% and 82% year-over-year growth, respectively. The company's financials, such as its balance sheet and cash flow, are thriving in addition to these remarkable advancements and accomplishments. Tesla's overall debt, excluding finance for vehicles and energy products, decreased below $100 million in the most recent quarter. The business is taking form. The cash is king mantra as well. Given that the global EV market is expected to expand at a compound annual growth rate of 25% through 2028 to nearly $1 trillion, It is possible to say with a great deal of confidence that Tesla is poised for more success in the coming years. In the first quarter, free cash flow surged an astonishing 660% to $2.2 billion. Tesla in the first quarter, Tesla delivered 310,048 vehicles, rising 68% from the same period a year ago, but falling short of analysts' expectations of 312,000. Analysts had predicted a lower figure due to the closure of Tesla's electric vehicle production in Shanghai because to recent COVID shutdowns in China, which caused significant logistical challenges in getting vehicles to European consumers. Dan Ives, an analyst at Wedbush, said the following in a client note. Do you think now is a good time to buy Tesla stock? Please share your opinions with us in the space provided below. Investors Business Daily's IBD shares checkup assigns Tesla shares a 95.99 IBD composite rating. American newspaper and website Investors Business Daily covers Wall Street, worldwide business, finance, and economics. According to them, when choosing growth stocks for the largest potential gains based on the Can Slim investment paradigm, focus on those with a composite rating of 90 or greater. The stock also has a relative strength rating of 87 out of 99, which implies that Tesla stock has outperformed 87% of all equities in the IBD database over the previous 12 months. Additionally, its ranking in terms of accumulation distribution is stock price and volume fluctuations over the previous 13 weeks are analyzed for this grade. Institutional buyers are active if the grade is an A, while sellers are active if the grade is an E or lower. Consider C to be an indifferent grade. There are no words to describe Tesla's meteoric rise. It's shocking to think that sales weren't above $1 billion by the end of 2012. There was a 71% increase in earnings in 2021 compared to the previous year. Even more amazing was the 81% year-over-year increase in sales that occurred in Q1 2022. The expansion of the company's margins bodes well for future financial success. Tesla is not compromising growth for profits as seen by the expansion of margins. The question is, should you go ahead and acquire Tesla stock today? It is advisable to consider these three questions and their related answers before making a decision first. Tesla stock, at risk from Twitter and other distractions. Some investors were reportedly worried by Musk's Twitter shareholding, and some even speculated that the Tesla CEO had moved on to another project. Will higher gas prices lead to more inflation than the additional demand they create? Consumers bear a disproportionate share of the cost rise, and high petrol prices may encourage some to switch to more affordable electric vehicles. Consumers' capacity to buy new cars could be impacted by rising prices across the economy, including petrol. Finally, will Tesla's competitive advantage be eroded by the market? Tesla may be the most well-known electric vehicle manufacturer, but many other companies are rapidly catching up. The huge up and down share price oscillations that are characteristic of Tesla shares are something prospective buyers should be aware of. These are the key points upon which you must focus. Create a brokerage account immediately. In general, you'll want a brokerage account with no trading commissions, useful trading tools, and no account or inactivity penalties. Keep in mind that a Roth IRA could be a suitable place to store your Tesla shares if you're investing in the firm for retirement because you trust in its long-term potential. Because eligible withdrawals from a Roth IRA are tax-free, you won't have to fork over any money to the IRS in the event of investment gains, which might add up to a tidy sum in the case of a rapidly expanding firm like Tesla. When delving into the rudiments of Tesla, go in with your eyes wide open. Keep in mind that you are investing in a little piece of a working company. Tesla's balance sheet, income statement, competitors, and management will help you give the company a good once-over. 3. Decide whether you should acquire Tesla stock. 4. Create a budget for your Tesla stock. Purchase. The amount of capital you have at your disposal is a crucial factor here. Although experts recommend budgeting for 3 to 6 months of costs, even $500 to $1,000 is a good beginning. You should think about when you might need the money you want to put into Tesla. You should consider Tesla as a long-term investment and only invest money you won't need in the near future, as the typical time horizon for stock market investments is 5 years or more. Determine the optimal time to invest in Tesla shares. There are a few paths open to you. You can buy Tesla stock right now, buy Tesla stock at a certain share price, or buy Tesla stock methodically over time. If you compare Tesla's profit margin to that of traditional automakers, you might be surprised. Because Tesla bypasses middlemen and sells straight to customers, it keeps all of its money. In addition, it is dedicated entirely to EVs. If you want to know more about Tesla stock, check out our other videos.